Welcome to Super Entrepreneurs Podcast. Today we have with us David Bruce. David Bruce is a director at Accelerated Banking, a program that helps homeowners pay off their mortgages faster so they can achieve their financial goals sooner. Welcome, Bruce.
No, thank you for having
me. David.
I've got 3 first names. Yeah. You can call me by either.
Yeah. No worries. Nice having you on the show.
Glad to be here. Thank you for having me.
No, it's my pleasure, my friend. That's pretty exciting. So how does this work exactly? Is basically like a savings system where their income comes in and a portion is taken to the mortgages, or can you elaborate on it?
Sure. So what we do is we use lines of credit to finance real estate instead of mortgages. And the reason that we do that is we want to get away from the amortization schedule, because that amortization schedule is like a 30-year debt trap. So much interest is paid up front with very little money going to principal. And then most people fall into the trap of they refinance at some point and start that loan all over again, or they sell their house and move and get a whole new 30-year mortgage and start all over again. So what we want to do is we want to use a line of credit to finance real estate. And the reason that we do that is now we get to introduce our cash flow, because what we're doing is we're teaching cash flow strategies in order to be able to use every dollar every single day in order to avoid paying unnecessary interest. So what we want to do is we want to think about that line of credit as our checking account and our savings account. So there are no more free loans to the bank by letting money sit in a checking account or a savings account. So think of it like this. If you've got $25,000 sitting in a savings account tonight, ultimately you're giving the bank pretty much a free loan for $25,000 when you could be reducing the balance on your debt by $25,000 for that day, therefore avoiding interest on $25,000 that night. And avoiding interest is a guaranteed return. So what we want to do is we want to stop giving free loans to the bank, because we want to use every dollar of our money every single day to avoid paying unnecessary interest. And when we do that day in and day out, the little things add up. That little bit of interest that you avoided today is interest that you will never pay today, tomorrow, next week, next month, or next year, which then allows the principal to be reduced much faster.
That's wonderful. Now, do you feel is this more for people that have a higher income to be able to do this, or can a regular person that has being able to pay for a mortgage?
Yeah, it's not that it's not for a regular person per se, but what it is it's a cash flow strategy. So you have to have more money coming in each month than what you're spending. So it's really the balance in the strategy is the enemy. So the larger the balance, the more money that's going to need to be left over at the end of each month in order to be able to reduce that balance rapidly. Because the balance is the enemy, and we want to eliminate the balance as rapidly as we can, because the less the balance, the less interest the bank can charge you.
Yeah. As an entrepreneur, you could see this as a pretty good way to get out of the mortgage as fast as you possibly can. So it's ideal for people that are in business, I see.
It is. A lot of the business owners they're the ones that are in control of the cash flow of the business.
Yeah.
And because of that, there's ways to not only look at the cash flow that they're using to pull out of their money, pull out of the business for their monthly expenses. A lot of businesses may have a lot of lazy money sitting around that they need to have for reserves, but it doesn't really do anything. It's just there. And so they have the ability to pull money out of a business, park it in the home equity line of credit to reduce interest. And then when they need money back into the business, they can turn around and put it back into the business. So that's something a little more advanced for a business owner. But the main thing here is that what we want to do is we want to help families all across the country have a financial peace of mind, have a better plan, and know that there may be a better way. Now, for somebody that's living paycheck to paycheck and there's no cash flow left over at the end of each month, the math is not going to work in their favor, because this is ultimately a big math problem.
And when you're talking about line of credits, is there an average or a limit of the house value that someone can take advantage of this?
When you talk about home equity lines of credit, there's two types. There's a first lien position home equity line of credit, which is that would mean it's the only loan that you have on your home. And then you would have a second lien home equity line of credit, which is what most people think of when they think of a HELOC, which is you already have a mortgage balance and you're accessing the additional equity between the difference of what the house is worth and what you owe. The banks that we work with, and we've researched hundreds of banks across the country, they will actually allow up to 90% of the value of the home. Now, that could be in first or second lien position. So that means that there's access, you have the ability to access up to 90% of the value of the home.
That's great. And like you mentioned, it's a math game, right? Because this actually it makes it more streamlined too, right? When you're managing your finances.
Right. It really does, because what it allows you to do is when you think about cash flow, you think about daily, because our goal is to get the daily balance as low as possible each night. So it makes you think about how you spend money. Now, here's the thing. We're not asking people to change their lifestyle, change their budget and eat rice and beans in order to be able to save money and pay off their home faster. This is about living your life the way you're living it now, but just knowing that your cash flow is being used more efficiently, streamlined to your word, in order to minimize that daily interest. And then when you start thinking about cash flow, one of the things that'll happen over time, and once someone really comes to understand the strategy and they're seeing the balance melt away, it makes you think about how you spend money, because we all waste so much money.
Yeah.
And then it comes down
Clarity,
to,
right?
oh, yeah, we do without even thinking about it. It's the $5 Starbucks every day. It's the
Yeah.
the little things that just slip through our fingers that we don't think about. And then it's those things to where you have a buying decision and there's something that's $70 and there's something that's $100. Wow, okay. If I spend the $70 instead of 100, that's $30 that could be balance could be lower tonight. That's $30 I'm not going to pay interest on today, maybe ever again. So it makes you think about over time. What we found is that we're not asking people to change their lifestyle or their budget, but people come to realize that they think about how they spend money differently because of the time value of money. That if you buy a $5 coffee today, that actually may cost you $23 over the next 20 years because you don't have that $5 that you avoided paying interest on. So it's
Mm.
people think differently about money, and then it's that mindset. So really it's about education, it's about mindset, and it's about saying, "Hey, Mr. Banker, this is my money. I had to go to work. I had to earn it. I got taxed on it. I will fight you for it. I'm not going to pay you any extra interest."
How did you come across this concept? Is this something that you were always working on, or is it just happened?
No,
Is there a story
it's
behind it?
yeah, it really is. This is how other countries like Australia, New Zealand, the United Kingdom, a lot of other countries finance houses this way. It's more
Oh,
mainstream.
really?
Yeah, and it's called in the other countries, it's called an offset account because you're offsetting the balance in order to avoid interest. Well, a bank came and brought this to the United States back in like 2006. And I've been in the mortgage industry now for almost 30 years and owned four mortgage companies throughout my career. And when this bank brought this back, I was like, oh my God, this is it. This is it. This is going to change everything. Then the financial crisis happened in 2008, 9. That bank turned around and said, you know what? It's too complicated. We're going home. And I was like, oh my gosh, why that it didn't stick? It didn't stick. And so we recreated it in some ways. And then some of the other lenders and banks and Fannie Mae failed and Countrywide Home Loans failed and the mortgage industry collapsed. So a lot of the lending products that were available disappeared. And I'm like, there goes that idea. It's gone. And about 7 years ago, I was reintroduced to it. And I realized that, oh my gosh, this has been sitting on a bank shelf. Nobody's talking about it, but it's available under the term home equity line of credit. And when I realized that, number one, I was livid with myself that how in the hell did I not know this, being in the industry, owning a mortgage company at the time? And I'm like, if I don't know, what chance does the consumer have? So I've dedicated my life now and my career, closed my mortgage company, and this is what we do. We believe in financing real estate with home equity lines of credit. And so what we're trying to do is spread the message. We're never going to have a marketing budget like Rocket Mortgage or Quicken Home Loans or the big boy names that we just can't compete with in the mortgage world. But the great thing is we don't need to compete with them because they're selling 30-year debt traps. So we're trying to undo the pain that they're causing based on the status quo. So what we're doing now is just trying to drive awareness, drive people to ask that question of, wow, I didn't know. How could this help me? Whether it helps them today, or maybe they're not ready for it today because maybe they're a little too cash flow to paycheck.
Tight.
But over time, if I can plant the seed, give them an idea that there is a
Yeah.
better way, give them a couple tips or some things that they could be working on. And even if it's a couple of years later, and I can come in and take them from 25 years down to 10 years or less, it's a major victory.
Mm.
So it's about awareness.
Yeah.
And that's what having a outlet like this today to be able to share our story allows us to just be able to let more people know that, hey, this is something that you might want to take a look at, because the mainstream media and the mainstream marketing is not going to tell you about it. These are bank secrets.
And can you share if it's better or worse or any difference between, for an individual or a family that's looking to buy their first home, going about it this way than the traditional mortgage way?
Yeah. The thing about the first time home buyer is a lot of times they just don't have a whole lot of down payment money. And
Yeah.
that's what keeps them or makes
Yeah.
them wait to become a first time home buyer. With this program, because I mentioned earlier that you can finance up to 90% of the value of the
Yeah.
home, that means for a
Yeah.
first time home buyer, they need a 10% down payment. So
That's what
in order to come into this with a first lien home equity line of credit. So not everybody's going to have that 10% down payment, but that's okay. So what we do is we can teach you, because you could actually purchase a home with the HELOC on day one and never have a mortgage if you have the credit and if you have that 10% down payment. Again, that's something that very few banks are willing to do, and nobody markets it. None of the banks will market that. But for those people that don't have the 10% down payment, they can go ahead and use that traditional mortgage, whether it's FHA with 3.5% down payment or a 0% down payment for a veteran that gets the benefit of no down payment. But then we have other cash flow strategies that are like using a personal line of credit that can be implemented to break down the balance until you build enough equity. And then you can run away from that mortgage into a home equity line of credit. So some people can start on day one with the home equity line of credit when they buy their house. Some people are going to need to have a mortgage as a stepping stone. But the goal there is to run away from that mortgage as fast as you can to get into the simple interest calculation of the home equity line of credit so that you can introduce the cash flow, change the way that interest is calculated all the way down to the daily level, and quit giving the banks free loans every night.
Yeah.
Because
And I
that's
like
one of
the
the
way
things that people don't realize. People just don't even think about it that way. When you deposit
No.
money in a checking account, you're giving the bank basically a free loan. What are they paying you? 0.1% interest? Even if they're paying you 1% interest, but you could avoid interest on a mortgage at 5%, you come out 4% ahead.
Yeah. And that's why it's important to spread this awareness, right? Because if someone is not even thinking about this, it's not even crossing their mind,
Right.
and all of a sudden they hear this idea, it sounds interesting and it's worth a conversation at least.
And that's what we feel is one of the things that I truly believe is you just don't know what you don't know until you know it.
Yeah.
And so for those out there that have never heard of it, this is about, hey, wow, this is something that I need to take a little bit of time and check into. It makes you think about budget. Number one, are you budgeting properly? Most people don't even, they just spend freely and they
It's
don't
the
have a budget and
awareness.
then wonder why they're broke.
Yeah.
You need a budget. So the foundation of this is budgeting, to know what money is coming in, what money is going out, knowing that you're cash flow positive, that you have the ability to save some money. And then from there, we have a calculator that we can take people to that runs the scenarios, because this is a math problem, and look at what type of time can be, how much time, how much faster can it pay off, how much interest can it save. And then the other thing that's also is, this is just step one. This is just the tool that allows you to take control and have a plan. Because what happens is, what are you going to do with all of those dollars that you're no longer unnecessarily paying in interest? Those are now dollars that are going to be able to educate the children, plan on retirement, be able to have down payment money for investment properties, be able to be thinking about increasing net worth, being able to pass along generational wealth. But if you just keep giving the banks free loans every night while they're charging you interest that you could be avoiding, those things become a lot harder. So when you take control, some of those things become available. They become real. That, wow, there's possibilities. So The HELOC and using our cash flow strategy is just the foundation of what we want to do in order to be able to accomplish other financial goals.
It's interesting. Anybody else doing this?
Very few, very few.
Hmm.
There's a few banks that market this, but we treat this as an education product. So our service is education, consultation, bank research, and ongoing support to help people be successful using the strategy. So it's one thing to say, oh, I heard something about a first lien HELOC or a HELOC online, and I'm just going to go apply for a HELOC and I'm going to do this. Most likely, you're going to stumble. You're not going to get maximum efficiency because there is an education element that goes along with it. There is the correct HELOC versus the wrong HELOC because of the terms and conditions and the way that money moves efficiently throughout the process. So it's about being able to hold hands and be able to bring people in to make sure people understand the concept. They are properly qualified, that they answer the really two big important questions. Number one is, can you get the right tool, the HELOC or the line of credit that you need to use the strategy? And then number two, based on your cash flow, is this something that you should even consider at the current time?
Yeah. Does it make sense?
Because for somebody that's living paycheck to paycheck, it actually could be worse than their mortgage. So we would never
And
want to
that's
put
where you
somebody into
come
that
in.
situation. So that's where we do the qualification. And I mean,
Good.
I could tell story after story of families that are successfully using the strategy. And I could tell story after story of people that tried to go do this on their own, thinking they just watched a video on YouTube and now they know everything they need to know, and they go get themselves in trouble. So it's about doing things properly. It's about having the right strategy.
Yeah, no, definitely. And what you're doing is helpful, right? Because someone might not even know that this is an ability for them to make things better, save more, and reinvest. And this information, when they find it, they could actually take steps to make that happen. Now, when taking those steps, you have a website where they would actually go and fill out some basic information before you get on a
Right.
call. Can you run down the process of someone watching this or hearing this that
Sure.
says, hey, you know what? I'm going to go check out David now. What do I do?
Yeah, of course. So what we do is acceleratedbanking.com is our website. And what that's going to do is that's going to take you to a calculator. Because one of the first things we want you to be able to do is start thinking about your budget, being able to put in your income, put in your expenses. And once you download the calculator, you're going to be invited to a webinar. It's about 45 minutes. And this is where my partner, Sam Kwok, and I go through and give a high level overview of the strategy, what can be achieved, and then give you the action steps or the things that you need to be prepared in order to schedule a free consultation. So what we do is we do some pre-education. We give some tools to allow them to start looking at budget and income to see what type of potential results can be accomplished. Then we offer a free consultation where we get you with one of our expert consultants. And what they're going to do is they're going to basically say, paint me your picture. Tell me where you're at financially. Tell me where you want to go. So here's where our debt levels are. Here's my mortgage. Here's my car. Here's my student loans. Here's my debts. Here's my income. Here's my other living expenses for the food, the gas, the groceries, because this is about every dollar that comes in the budget, every dollar that comes in and every dollar that goes back out. So what we'll then do is go through that process of structuring and seeing and running a few scenarios as to which of our strategies is going to best fit their needs, whether it's just paying off a mortgage quickly or for somebody that has multiple properties, because we can help with investment properties as well, whether it includes a debt consolidation as part of the process to maybe eliminate some credit card debt that frees up additional cash flow, maybe consolidate a car payment to get rid of a car payment. Because again, a car payment is an amortized loan. We want to get away from that as well. So we're looking at ways to make the cash flow as efficient as possible. And then we look at which of our strategies is going to help you get to the finish line the fastest, which is going to save you the most interest and allow you to open up that door for the most possibilities. So it starts with a webinar, then it turns around and it comes to a free consultation. And then once we've gone through the consultation and we've answered the big questions of, can you qualify to get the right tool that you need? Some people can, some people can't. There's reasons why people can't be approved. And then we look at the cash flow to determine the results. And from there, if everything looks good, then we explain what our services are and how we can help you and assist and hold the hand throughout that process.
Wonderful. Thank you so much for sharing that, David, because sometimes people hear something interesting and have to figure it all out on their own. This kind of allows them to understand the steps before they take action. So I appreciate you sharing that.
Oh,
What do
my
you
pleasure.
feel your innermost superpower is that got you to this point, David?
I think it's, and this comes back from the 30 years in the mortgage industry, and it comes to helping people. My biggest passion is helping people on their path to debt free home ownership. And in the past, before we were able to really promote this, it was about doing the right mortgage product at the right time, strategic planning with mortgage planning. And then when I learned about the strategy and I saw that this is something that we could implement on a larger scale, it becomes about being able to use my experience on how I've used this for my family and be able, because I
Mm.
implemented this strategy and paid my home off in 13 months.
Oh,
And I've
wow.
actually paid my home off 3 separate times because what I've done is
Amazing.
my home is now my bank. I have a line of credit with has a lot available equity, and I can use that at a moment's notice. If I had a $400,000 opportunity today that I could make money, I could write a $400,000 check and go do. I'm in business, so
Mm,
liquidity and access is
interesting.
also important. So I want people to just. I would say it's the caring and the understanding of people that in this country, the secret, in my opinion, to financial success is to get that house paid off as early as possible so that debt goes away so that you're then able to reallocate those funds towards the real financial goals. Because it's okay to pay interest for a place to live. You just don't want to do it for 50 years because most people
Yeah.
have mortgages over and over and start over.
Mm.
And next thing you know, they're 70 with a 30-year mortgage. We don't want that.
Yeah, it happens a lot, and a lot of
And
people
then my real passion here is we help homeowners of all ages. Really, one of the big segments that we also help is people that are getting closer to retirement and they're worried about being able to go into retirement with that mortgage payment. They want to get rid of it before they go into retirement. And that's important to us. We help a lot of families like that. But the thing that I'm really passionate about is the younger generation for them to learn this from day one. And hopefully they can avoid the mortgage altogether, come up with that 10% down payment and just use a HELOC to purchase that first home. But let's be honest, not everybody's going to be able to do that. So the goal is to be able to start with a mortgage, run away from it as fast as they can, but be able to sit back in retirement and say, I've never had a string of mortgages throughout my life because I knew better. And so I want to
oh, it's
empower and
great.
educate the younger generations not to fall for the trap someone my age has, because I've
Yeah.
owned a bunch of properties and I've had a bunch of mortgages. And if I could go back in time, I would tell myself, hey, dummy, you shouldn't have done that. You should have used
Yeah.
this other method.
Yeah, no, David, I appreciate you sharing all this, and I can hear the passion in what you're saying, because at the end of the day, when you help others, growth for you just happens automatically when your focus is put on helping
Yep.
people, because the struggle is there, especially with mortgages and all that's happening right now. And I'm glad that you took the time to come on this show, actually, because I love spreading the message of where entrepreneurs are really focused on helping people. And I thank you for that and appreciate your time today. Audience, thank you so much for joining us once again. Appreciate you as well. Without you, we couldn't be doing all this. It's appreciated. And get in touch with David. Check out his information, his site, webinar. See how it can help you, because it doesn't. It's not just that one direction of the mortgage. They actually help it all debt, all areas that are affecting you as a person, and that is super important. So get in touch. Again, appreciate you guys helping us grow. Thank you, and thank you, David.
Thank you so much for your time. All right, thank you.